This is by far the easiest way to identify supply and demand zones. Hey guys, my name is Fabio, and in this video I'm going to be explaining exactly how you can identify supply and demand using two very easy to use methods. So let's dive in and I hope you enjoy. Alright, so we're here on the 4-hour time frame on NZD/USD, and I'm going to be showcasing the exact two ways how you can identify supply and demand. So we're going to start with method number one, and method number one uses an indicator called the 50% body candle by Emmy Nuss. So what you want to do is you want to load in that indicator, and very simply explained, what is a 50% body candle? Well, a 50% body candle is a candlestick that represents consolidation on the lower time frame. So what were to happen is that if you draw in, for example, the zone over here on this 50% body candle from wick to wick, because it's important always on 50% body candles to draw your zone from wick to wick, is that what you'll see on the lower time frame is that 50% body candle is an area of consolidation. As you can see over here, we're moving sideways within this box, and once the market returns into that box, it pushes down lower once again. So that is the easiest way to identify supply and demand using a mechanical indicator. And all you want to do is draw the zone from wick to wick. This is rule number one. And rule number two is that the zone needs to break market structure. So what we have over here is a break of market structure in towards the downside. And as you can see, as soon as we come back into that 50% body candle, the market decides to push down lower. And it happens time and time again. Here as well, we see a break of structure in towards the downside. What you want to do is you want to get that 50% body candle, which is closest to the break of structure. Draw that from wick to wick, and what you see happening is that the market comes back in towards that zone and then once again pushes down lower. And what is extremely interesting is that it happens time and time again. Once again, what we see over here is that if you look at these 50% body candlesticks and we draw the zone in over there, you see that the market comes back in towards that zone, once again pushes down lower. Now we just adjust the zone to the new 50% body candle, once again draw the zone in from wick to wick. What you'll see is that the market comes in and then pushes down lower again. So this is method number one. Now let's dive into method number two. Method number two is a lot more simple and very easy to understand. So when you have an area of supply demand, all you're looking for actually is a strong sell down before a buy up. This is going to be your area of demand. When you're looking for an area of supply, once again, look for consolidation, but then a strong buy up and then a strong sell down. That will then be your area of supply. In both instances, we just look for the market to come back in and then push out again. So what we can see here on our chart is that we're going to be looking for a supply zone in the form of a buy up and then a strong sell down. So what we have over here is, again, we draw the zone always from wick to wick, is that we have a buy up before a strong sell down. So what we see, buy up, strong sell down. What happens? The market comes in, pushes back down lower once again. Once again, what do we have over here? We have a strong buy up. Again, before a very strong sell down. What happens? Market comes in, pushes down lower again. Now let's dive into an example on how you can actually trade with these zones. All right, so for this trade example, we're going to look for a trade on the 1-hour time frame using a 4-hour area of supply. So what we have over here is still that same area of 4-hour supply, which is this imbalance candle, which broke market structure. As you can see, the overall trend is clearly in towards the downside, so we're looking for a potential short. So what we can see over here, and I'm just going to remove this zone for you guys, is that the market comes up into our supply zone. So what we're going to do is we're going to dive into towards the 1 hour and then look for that valid setup. I'm not going to do a replay mode because you guys all understand what we're looking for. But what we can see here is, once again, on the 1-hour time frame, we have another area of supply. And straight away, this is also how you can identify a stronger area of supply, by stacking these supply zones across multiple time frames. Because what you see here is that we have the initial 4-hour area of supply, but inside of that 4-hour supply zone, we have a 1-hour supply zone. Again, draw the zone from wick to wick on the imbalance candles, and as you can see, it breaks market structure in towards the downside. And very simply said, if we look at the other method, this is just the buy up, right? So the buy up before the strong sell down. Market comes in and then pushes back down again. So in both methods, it would be a valid area of supply. So again, what we can see is that the market comes into our area of supply. Now, what happens is that the market starts consolidating. We liquidate the range high, as you can see over here, and then we get a valid and strong push in towards the downside. We get a bearish change of character by breaking the lows over here. And as you can see, the market is now confirmed bearish. Once again, turn on the 50% body candle indicator, draw the zone on the latest candle from wick to wick. And what you will see is that if you take that stacked area of supply, refine it to the 1 hour, identify valid liquidity and trade in line with the trend, you can get in on these beautiful swing positions in towards the downside. Now, another example of taking an additional trade on this piece of price action over here is that if you look at, for example, this buy up before the sell down, you would have another area of valid supply. As you can see, this buy up, strong sell down breaks market structure over here. Once again, simply enter on top of this zone as well. And as you can see, place your stop loss above the supply zone. It nearly hits our stop loss, but then once again, as long as you're trading with the trend, you should be good. And as you can see, the trend continues, and that is how you can enter on top of these two different areas of supply. So I hope you enjoyed this video. If you have any questions, make sure to let me know in the description down below, and I hope to see you in the next one.